Good day. Today we are going to do the cash flow statement and the financial indicators. You are provided with information relating to Mabone Limited. The financial year ends on 31 October 2022. New shares were issued on the first day of the financial year. Required. What is the main purpose of the cash flow statement? What is the main purpose of the cash flow statement? So the main purpose of the cash flow statement, it is to manage the cash flow of the company. Okay, and then also it is to help the users of the financial statement to see how the cash is going into and out of the business. That is the cash flow. So I want us to get into it, where we are told to do the cash flow statement. So let's go to the question. 2.2. Complete the cash flow statement for the year ended 31 October 2022. Show all workings in brackets. Calculate the following financial indicators on 31 October 2022. Okay, let's go into detail. The following information was extracted from the income statement for the year ended 31 October 2022. So we are given sales, cost of sales, interest on loan capitalized. We are also given the income tax. So, and then we are also given net profit after tax. So the net profit after tax is this one. So then let's go into detail. Information B. So information B is given, but I just want us to quickly go and calculate the SARS income tax using this one. I want us to go and calculate the taxation paid. So usually the way I do this, this is a table that you're going to use to calculate the taxation paid. This one, this is our year. So the easiest way to calculate the taxation paid, because most of the time you might have a problem when it comes to calculating the taxation paid. So you have a previous year, and then we have the current year. So there's a debit, there's a credit. Debit, credit. So if the SARS income tax has a debit balance, the one of the previous year, when you're calculating the taxation paid, that balance it must be negative. Then if it is a credit balance, that balance it must be a positive. Then if the SARS income tax of the current year, the one at the end of the year, because this one, the previous year, it is the same as the opening balance of the current year. So if this one, the one of the current year, closing balance, if it is debited, it's a positive balance. If it is credited, it's a negative balance. So let's go and show it. And then after that, at the end, you're just going to go and add the income tax, the one that you get in the income statement. So when adding the income tax, the total that you get there is the taxation paid. So you get the taxation paid. So let's go and look for the SARS income tax and see if we were given SARS income tax. So here it is. So That is 22,250. Remember, our year ends on 31 October 2022. This means that our year starts on 1 September 2021. So they gave us the SARS income tax. Now, but we don't have debit, we don't have credit. But there is a SARS income tax, the one at the end of the current year. It's under trade and other receivables. And then the one of the previous year, it's under trade and other payables. Now, let's come back to this. So the SARS income tax, if it's a debit balance, because you must also understand that if a SARS income tax, it has a debit balance, it's an asset. So that is why we have to record it under trade and other receivables. But if it is a credit balance, we regard it as a liability. That is why this one is under trade and other payable. It's because it's a liability, it's a credit balance. So this means that the SARS income tax, the one of the previous year, the one October 2021, the one of the previous year, this means that it's a credit balance. That is why it's under trade and other payables. Then this one is a debit balance, the one of the current year. So this means that SARS income tax, the one of the previous year, is a credit balance. So if the SARS income tax of the previous year, it's a credit balance. So it's a positive, right? So this means that you're going to go to the taxation paid. We have a positive 27,500. Let's go into it. 27,500. Right? And then the one of the current year is a debit balance. So if the current year is a debit balance, what do we do? If the current year is a debit balance, it's a positive. So it's a positive, how much? So it's a positive 22,500. Then I said that at the end you have to add the income tax. So the income tax is given under the income statement. So the income tax is 375,000. 375,000. Right? So let's calculate. 27,500 minus 222,500 plus 375,000. There is 425,000, which is going to be in bracket. Right? And then, so the interest paid is already given. So there is no need for us to calculate it. And then the dividend paid. So how do we calculate the dividend paid? When we are calculating the dividend paid, how do we calculate it? We take the shareholders for dividend, which is a final dividend, right? Because the shareholders for dividend is a final dividend. But which final dividend do we take? We take the one of the previous year. Then we add it with the interim of the current year. So like this. Shareholders for dividend, which is the final of the, but we take the one of the previous year, we add it with the interim dividend. So let's go into it. Let's go and check the shareholders for dividends. So they're given. I said we take the one of the previous year. So it is given 385,000 because this one is the one of the current year. This is the one for the previous year. 385,000 plus. So then the interim of the current year, what did they say about it? they said the dividends, interim and final, for the financial year ended 31 October 2022 amounted to 825,000. So they gave us the dividends in total. So this one, 825, is including the final and the interim. But we want the interim. And they gave us the final dividends of this year. It is 450,000. So this means that if we want to find the interim, you can just say 825,000 minus 450,000. Minus 450,000. Then that is equal to 375,000. So this is our interim dividend of the current year, because we have subtracted the final, which is 450, then we're left with the interim. So we go and add it, 375,000. So now we add them. So that is going to be 760,000 in brackets. Then now we have to find the cash flow from operating activities. So to get it, we say cash generated from the operations, which is 1,985,500 minus interest paid 175,500 minus 425,000 minus 760. That is 625,000. Right? Then now we go into the cash flow from investing activities. So for the cash flow from investing activities, we just focus on the non-current asset only. Okay? We just focus on the non-current asset only. And then, so we have the fixed asset purchase, the proceeds from sale of asset. So let's go and check them. Let's go and check. Fixed asset. So it's given here. Let's go back here. The fixed asset. So here is the fixed asset. So we want to find the fixed asset. We want to find the one that is purchased by the business, then the proceed where the business has sold the fixed asset. So let's look at the land and building. So if you can check land and building, at the beginning it was 3 million, and then there's a disposal. So it means that the business here sold land and building. That is what is a disposal. So this is the amount that is going to go to the proceeds where the business is selling, because in the proceeds from sale of asset, we just record the carrying value of the asset that is being sold. So the carrying value of the land and building being sold, it is 500,000. Right? And then there's no addition, we did not buy it. And then there's a 82,000. So plus 82,000. So we sold the land and building and the vehicles. Right? We don't have the additions. So what else? Then the disposal, the carrying value. So the equipment was not sold. Then we did buy the equipment, 48,000, right? We did buy the equipment for 48,000. So we do have the additions for 48,000. So it's 48,000, right? So let's check if we still have something else affecting the fixed asset. A vehicle sold at its carrying value on the last day of the financial year. Depreciation is written off at 20% per annum on the diminishing balance method. So, but we don't have to calculate the depreciation because it's already calculated for us, right? It's already calculated. Actually, everything is calculated here, right? So we don't have to do anything. So the fixed asset purchase is 48,000. Now, because we purchased, it's an outflow. So the outflow must be indicated in bracket to show that it's a negative because it's an outflow. Since we are buying, it's an outflow. The money is moving out of the business. And then we have 582,000. So for the proceeds sale of fixed asset, we are selling. So when we are selling, it's an inflow. Okay? It's an inflow of the business. So it's going to be 582,000 minus 48,000 since it's in brackets. That is going to be 534,000. And then now move to cash flow from financing activities. So proceeds from the sale of the shares when we are selling the shares. So when we're selling the shares, let's go and check. Let's go and check if we're selling the shares. Did we sell any shares? Let's go and check. Yeah, here it is. 50,000 international shares were issued at 6 rand each. So we issued the shares, meaning that we sold the shares. There is a proceed of shares. So it's going to be 50,000 multiplied by 6 rand at 6 rand each. So 50,000 multiplied by 6, that is going to be 300,000. So because we are selling at an inflow of cash, because we are selling, so it's not going to be in brackets. Then the change in loan, how did the loan change? Let's go and check it. Let's go and check the loan. How did the loan change? So here is the loan. In 2021, it was 1,375,000. Now it is 2 million. So let's check the exchange. It was 2 million. Then it was 1,375,000 increased to 2 million. 1,375,000. So it's 2 million minus 1,375,000. That is going to be 625,000. So the loan has increased. It increased from 1,375,000 to 2 million. So because the loan has increased, it's an inflow of cash because we are receiving the cash. So because it's an inflow of cash, it won't be in bracket. Okay? It won't be in bracket. So let's continue. So let's add this two. That is going to be 925,000. Then now to get the net change in cash and cash, we have to say cash flow from operating activities, which is 625,000, plus cash flow from investing activities, which is 534,000, plus cash flow from financing activities, which is 925,000. There is 2,084,000. There is 2,084,000. So what else? Now the cash and cash at the beginning and the cash and cash at the end. So let's go and check the cash and cash. So we can see we are given the cash and cash. The beginning is given 207,500, and then the end is given 2,291,500. So the beginning 207,500, 207,500, and then the end 2,291,500, 2,291,500. So actually, to prove that we are correct, we must say that the cash and cash at the end minus the cash and cash at the beginning. So if this amount, they give you this one, so it means that we are correct. So we've done it, is correct. So that is the cash flow statement.